Hello and welcome to IIFL Markets YouTube channel. I am Shweta Papriwal and today we have Mr. Kamlesh Gandhi, founder and chairman, MAS Financial Services. Welcome to our show, Mr. Gandhi. It is indeed a pleasure to speak to you today.
Thank you.
Sir, given that the last 1 year and 1 year and a half, in fact, has been extremely difficult for individuals, for businesses, everyone. So let us start with understanding how was the company's performance in Q4 and what measures did you take to mitigate the impact of COVID during the past year, given the nationwide lockdowns?
So we declared our result on May 19th, and as shared with all the investors, Q4 luckily was almost a normal quarter for all of us because, and we all had started believing that pandemic is behind us, and unfortunately it was not the case as I'm talking to you right now.
Right.
So Q4 we had a disbursement of 1,300 crores, which was a jump of around 30% on a quarter-to-quarter basis. And on a complete year basis, we had a AUM of close to 5,300 crores, which was a shrinkage of close to around 13%. But as you know, the 2 years are not comparable, 1920 and 2021.
Correct.
And during the complete lockdown and during this complete pandemic period, the company is focused on the fundamentals. Okay. Because being a lender for more than 25 years, we understand that this shall also pass, this should pass. But the companies with stronger balance sheet will have a good potential to grow and capitalize on the growth opportunities going forward.
Correct.
So in order, while working on this front, we could maintain our capital adequacy close to 27%. We had a very strong liquidity. And if you look at the quality of the assets, I'm in fact thankful to all the borrowers whom we serve. Because as you know that we serve to the informal class, and 85% of our portfolio comes from MSME funding. Correct. That as on March, our net NPA was 1.52% of AUM. And we had created a COVID buffer of 1.39% of our own book assets.
Okay.
So this is how we have maintained ourselves during this tough time. And being a practitioner for 25 years, we have not seen the tough time of this magnitude. But we have gone through many ups and downs, and right from 2017, post ILFS, the sector has been facing a lot of headwinds.
Correct.
And throughout our 25 years of journey, we always focus that if the balance sheet is strong, the growth can happen anytime.
Yes, you correctly mentioned that you have been focusing on strong fundamentals, which will take the company a long way.
Right.
Yeah. So, sir, now, as you mentioned that, all of us had thought that, COVID has been under control, but then there was the second wave again. So what has been the impact on the company's collection efficiency during the first quarter of FY22, given that, 2 months have already passed for the new financial year as we are talking today?
Luckily, April was almost normal because we started facing the problem from the end of the April. So April was almost normal with a dip of around 2 to 3% in our collection efficiencies. May was very challenging. The May we saw a dip of close to around from our normal 90 to 93% collection. It has dropped to around 80 to 85% because majority of the time the things were closed.
Correct.
And in June, we are still in starting of June, and we hope that with unlocking of so many areas, this should improve substantially. But from our past experience, what I would like to share with you that our borrowers are the ones who comes back to the normal the quickest.
Correct.
Because during COVID-1 also we had moratorium right up till August, and once the things started, if you have seen our results right from Q3 and in Q4, we are almost at a normal collection. So we anticipate the same thing to happen again. Can't predict, but we presume that we'll have a good collections from June onwards, and things should stabilize. God willing, if everything is fine around, things should stabilize from July onwards as before.
Okay. So, you are expecting that, you could return to pre-COVID levels and, post-June or July?
Hopefully, yes. Post-June, because June, there is phase-wise unlocking in various states.
Correct.
As I talk to you, even Maharashtra will be unlocked from 14th.
Yes.
So let us presume that June will be a warming up month for the people. They will coming back to the activities once again. And from July onwards, people will start to work hard and endeavor to pick up the lost ground.
Right.
And that is where our confidence stems out of, that in July, August, September, people should work more hard, and then we'll have all those things what we have lost to an extent recouped. So let us hope that we can recoup to a substantial extent in coming months post June.
Sure, sure. So in terms of various segments that the company operates, like you rightly mentioned, the micro enterprise loans, SME loans and CVs and two-wheelers, where do you see better traction going ahead? And given the auto sales numbers that we are seeing, do you see the CV and two-wheeler segment to pick up anytime soon?
So CV is very sensitive to the economic activities. If I start with commercial activities, that once the commercial activity starts and back to normal, CV should come back to normal. Two-wheeler, we all know that since last few quarters we are facing pressure on sales, so I think that will continue. The stress will continue in two-wheeler. And as far as our MSME customers are concerned, which constitutes around 85% of our book, we serve to the people for their working capital needs. So for the small traders, retailers or manufacturers, the complete sector, once they start their daily routine and once they start their working, they will require the working capital. Correct. So we will see the traction there soon as soon as the things normalizes. The million-dollar question is that how to adjust and how to extend credit where it is due. Correct. Because the dynamics have changed, the cash flows have changed. Yes. So as a lender, we need to be very circumspect on how we continue with our exercise of assessing the customers in the right perspective and extend credit where it is due, so as that our new loans are not a burden to the borrowers. So that will be a task we worked upon. We have to see the things, how they unfold over a period of time. While the traction will be there, but the question will be that how we'll be in a position to extend credit in such a manner that the quality of the assets are maintained.
Correct. So while, we expect that, things should recover, what kind of measures have you implemented to improve your collection efficiency?
See, if you see our collection efficiency, 100% of our collection is banking based. Right. So that puts less stress on the system, number one. Number second, the only measure which has proved very effective and potent over all these years is continuous customer engagement. Correct. Because this is the time where you have to be with the customer, not against the customer. This is the time where you have to understand what are the problems they are facing, and basis their cash flow, how we can cooperate within our tolerance levels and within the parameters of what we have prescribed internally, and see to that how we can maintain their credit history, give them all the facilities available with us, and see to that they also survive and our quality of the assets are also maintained. So in short, it all revolves around how we engage with the customers. And that is what we have been doing right from day one when the first lockdown was announced to till date, as I talked to you, that a very constant engagement with all the borrowers and understanding them thoroughly.
So any kind of digital initiatives that you have implemented over the past 1.5 years?
So that's a continuous ongoing process, that online repayments to various means whereby they don't have to physically go to their bank or they have to come to our branch. Right. As I shared with you, our transactions being banking based, they were so to say digitalized right from day one. Yes. So on that count, just the dissemination of the information and messages to the customers with the help of the latest communication means has helped us a lot.
Correct. So what will be the company's focus going ahead? Will it be asset quality or loan growth?
See, over these years, we work in priority of quality, profitability, and growth. We understand that all-round growth is development. Correct. In lending business, just increasing the top line is the easiest thing what one can do. But to have the right combination of quality and profitability is where the challenge lies. And that is the role of all the financial intermediaries, be it NBFCs, bank, HFCs, or whomsoever you may call it. We all are financial intermediaries whose function is to see to that how we mobilize savings to the right person who requires. Right. But the buzzword or the most important thing is that how we maintain quality and how we maintain profitability by maintaining quality. Thereby, we safeguard the interest of all our stakeholders, be it our lenders, investors, and our borrowers.
Right. So you're looking at a 360-degree approach towards growth.
Yeah.
So what are your geographies?
This is not a good, I think this is not a good virtue, this is a requirement.
Of course.
For sustainability and scalability, as a financial intermediary where we all are a leveraged organization, having a 360-degree view in terms of growth, quality, and profitability is incumbent on us. We are mandated to do this.
Correct, correct. Truly said, sir. So what are your geographical expansion plans and what kind of AUM growth are you looking at over the next 2 to 3 years?
So if you see our distribution model, it is a little unique in the sense that we have around close to 100 branches whereby we cover 3,500 centers. Every
Okay.
branch will work within a proximity of around 40 kilometers around it. And that is where we extend our services to as many as 3,500 centers. Plus, we have a very unique distribution model with more than 100 NBFCs of the country, because we understand that that serving the informal class, the people closest to the ground are the strongest.
Right.
Serving the informal class is not the function of a balance sheet size; it is the function of their demographic understanding.
Right.
So we have a very efficient and a scalable relationship with more than 100 NBFCs of the country. So this forms our distribution network. That by virtue we are present through our direct presence and through our NBFCs throughout the country. In terms of our own reach, we are scattering to as many as 6 states, and we would like to penetrate deep within a year or two rather than expanding on states. So what looks like 3,500 centers right now will look like around 7,000 centers reach within next couple of years.
So what states will you be, focusing upon, and are you strongly placed in which areas? I mean, in the north or south, east, how is it?
We are more focused on the western part of the country,
Okay.
Gujarat, Rajasthan, Maharashtra, Madhya Pradesh. And we have 2 states whereby we're expanding our reach there also in the south, that is Tamil Nadu and Karnataka.
All right. And so what kind of future growth strategy overall is the company has kept in place to gear up from here on?
So as I shared with you, we are a 25 years old NBFC, and if you see our presentation, having started with a modest AUM of 2 crores in 1995 and close to a group AUM of 6,000 crores as I talked to you, translates into a 30% plus CAGR over all this extended period of 25 years.
Correct.
With the strong enablers of a very strong balance sheet and a large market where we serve, and with the niche expertise, we see that once the thing normalizes, our growth trajectory of anywhere between 20 to 30% will be maintained.
Right, sir. So thank you so much, Mr. Gandhi, for taking the time out and briefing us about the performance and growth plans of MAS Financials. We thank you so much, sir.